The escalating Middle East conflict marked by U.S. airstrikes on Iran is set to impact Nigeria's economy through volatile oil prices, inflation risks, and currency fluctuations, while rising crude prices could boost Nigeria's foreign exchange inflows and fiscal revenues. Analysts caution that market uncertainty may delay interest rate cuts by the central bank. Questions also loom over OPEC Plus's supply responses. Iran threatened to close the Strait of Hormuz, and the Naira's muted reaction despite a weaker dollar. Experts urge Nigeria to leverage the crisis for strategic economic gains. And we'll get into more of the details of this as our guests join us now. We have Bolariwa Jurjaye, oil and gas technologist. Thank you for joining us.
Hi, Joanna. Thanks for having me.
A pleasure. We also have Dosu Odekunle, MD, Mark, and Synergy joining us as well for the conversation. Good morning.
Morning. A pleasure to be here.
Yes, a pleasure to have you in. So let's begin with Bolariwa, and of course, a picture of how Middle Eastern conflict, and we know that it's a developing story. It's changing almost minute by minute. Give us a picture of how this is sending or reverberating through the Nigerian economy, the ripples it is sending through our economy.
So it's like you said, it's an emerging story, and it's one of those situations that as you observe and as you analyze, the very thing that you're observing and analyzing is changing, right before you. The underpinning dynamics, that informed even this topic that we're discussing right now was an initial rally in global crude oil prices. And for those of us who are watching, that rally has somewhat reversed itself already. You can see that the market has priced in, what other uncertainties and whatever supply constraints are being anticipated into oil prices, and that's what has informed the reverse in the rally. So to answer your question more directly, how does this impact the Nigerian economy? As we know, oil prices have been a little below the oil price benchmark that the 2025 budget was set on. Obviously, that initial rally kind of changed that dynamic a bit, and brought oil prices just a little bit above the budget benchmark. But like I said, that has been reversed now. So what would have appeared to be some kind of a positive, some respite, essentially more foreign exchange earnings, and more FX to fund FX demand, and ultimately also to fund budget spending. That hope seems to have all but disappeared right now. So the current situation, it looks like nothing's changing per se. But again, it's a developing story. Let's see how things go.
Yeah, it's a developing story, and again, so much is changing, so much volatility. I can imagine analysts are having a hard time right now trying to draw predictions and determine directions. But let me come to Dosu Odekunle now. And coming to oil prices, we have seen quite a bit of volatility this year. 1 minute we're seeing a rally, then we're seeing a pushback. Is it too early to be optimistic of sustained high oil prices, from a revenue standpoint? Because there was that initial excitement yesterday specifically, and now today, yeah. So what are your thoughts on, the volatility in oil prices?
Joanna, hi. So it's not, I think it's a little bit too early to tell. Most of the markets probably did not expect, a sustained price. I don't think the heavy hitters and consumers want market prices to rise. As you can see, the U.S. sent a signal out quickly on the possibility of the Strait of Hormuz being closed. They had said they had reached out to China saying that they should please speak to your friend, or I beg, we don't want this We don't want market prices to rise. So I don't think people actually, well, I don't think the market actually positioned to see like any kind of fierce market rise. The US and obviously China and India will have fought to sort of keep it down, as with the rest of the global market. So like I said, it's still as of then, my own predictions were it was still too early to tell. I didn't think it would be sustained. And I mean, as we can see today, it's sort of dying down. Crude is already sub 70. And this is because, you know, the whole world, the volume of crude that passes through the Strait of Hormuz and all of that will have generally affected a big chunk of the market. And the ripple effect will have been felt everywhere. So the yo-yoing of pricing is not so bad. I mean, that was the first major one was in March on Trump's announcement. And then the second one is this one now, which has happened. It's interesting. I mean, even with the Israeli-Iran strikes, there was a blip on the market and then back down. So the global forces are making sure that the price stays at around the steady 60,
so
and maybe even hopefully I don't know, lower 60.
Lower, okay. I mean that can't be good for the Nigerian economy. But as you have pointed out, there's an intentional effort to keep prices down globally, in spite of whatever conflict may arise. And we'll come to that again on how this may be reshaping the global oil sector. But I'm coming back to you, Nambolanwa. Announced the Nigerian economy and the Naira. What would you say is the case for the Naira with this conflict in the Middle East, considering we haven't even seen as much strengthening in the face of a weaker dollar? Yes, it's oil prices, but we know that there's also been a drive to safe haven assets. So, I mean, what's the Naira's play in all of this? How is the Naira responding to this?
Thanks, John. We can see it literally in the rates, and the picture looks a bit flat, really. The Naira is not gaining value in any material kind of way. And again, when you look at all the underpinning dynamics and the fact that what we had thought was an oil price rally is not actually going to be happening in any sustained kind of way, then the picture going forward does not suggest any material increase in FX earnings or flows or supply to the foreign exchange market. And to that extent, it's supply and demand, really. We have seen, some activity in foreign portfolio inflows, but that essentially has given us a flat outcome. And I will say this, I like to say it's when you have a demand picture, that is pretty much fixated on betting against its own currency, it's very hard to oversupply a market like that. The Naira strengthens and people with liquidity just buy more dollars. It's extremely hard to oversupply a market that is bent on betting against its own currency at scale. And I think that's what we're seeing. That's the outcome we're seeing right now. Unless we have a picture, where supply is overwhelmingly trumping demand in a sustained kind of way, unless people literally start to lose money by betting against the Naira. This is what we're going to be seeing. We might see some increased supply, and then demand will just catch up with it. It's a picture we've been seeing over and over again. So for me, the current situation is flat, and the outlook is probably the same, to be honest.
Mm-hmm. All right, so we'll see.
I'll quickly say, if you don't mind, that's not necessarily a bad thing. Macroeconomists will tell you that the more important thing is stability. So if this is stability, then it's a good thing. Over too many movements in the currency, whether up or down, is never a good thing for a macroeconomic.
Yes, I mean, we'll see. So you're saying some level of stability with, the naira and maybe even oil prices. We'll get into how, those who need or use this data will use it to, inform their decisions like, the CBN, MPC, going forward, and how, of course, this is recalibrating the global oil market after this break. Do stay with us. All right, still sticking with the, de-escalating crisis in the Middle East and how it affects the Nigerian economy. We do have Bolanwa Jojaye staying with us, an oil and gas technologist, and Dosu Odekunle, MD, Mark and Synergy, joining us for the conversation. And to pick up from where we left off, I'm coming to you now, Dosu. You have projected that, forces all over the world will rally together to keep oil prices low, and of course that's Trump's ambition, right? Especially in the oil market, I assume, and you can correct me if I'm wrong. But how is this whole crisis reshaping the global oil markets, Dosu?
Well, I'm not sure much has changed. The blips that are happening, let me just go back a bit. In the past, usually a crisis like the one that was happening with Israel and Gaza, and then Israel and Iran will lead to astronomical spikes in the price, and it will reverberate through the shipping market, the finance markets, because obviously as the cost and the uncertainty of supply goes up, it will reflect in the cost of logistics, which will invariably get passed on to the end user. So the price would have, rippled through and gone up. But that's not the case anymore. We have spikes 1 or 2 days, price goes up, rallies, and then, starts its downward trend. And that has been the trend throughout the whole of this year. So even though there's uncertainty with what happened with Iran last week, the effects have not been that dire. I mean, on Monday, we saw an $80 barrel trade. Market went up to $80, but we're sub 60. We're sub 70 today. It's 69. So, and market continues to trade downwards. The futures market for December is around 66. So there's no real impact as such. And the market is also actually well supplied. There are contingency plans for the major movers to find other ways to move their oil if need be. So I don't really see any drastic change happening, anytime soon. Something really, really terrible obviously has to happen, like, Iran waking up and saying, we're going for an all-out war and retaliating aggressively against the US and its allies. Now, I mean, obviously, nobody wants that. I also believe that no one is pushing for that. So they are staying within their lanes, and obviously the diplomats are working behind the scenes to make sure that they're managing whatever fallout. So I don't see any drastic change in what the prices would be. I think the market will continue as is, and as it settles down into the lower 60s.
Okay. So all this talk about $100 a barrel is far-fetched.
No, I mean, like I said, something drastic has to happen, and that drastic level has not happened yet. We haven't reached that threshold. It used to happen in the past. In the past, when there was any form of conflict, traders would take positions because they knew that something was coming, and the market would rally and jump, and then you go from 60 to 100 literally, and then it gets sustained over the next few weeks. And then some people they profit from the benefit. But the market has really evolved now. Data and analysts are able to sort of look at contingency plans, rerouting routes, and absorb the shocks, which is why it's so strange now that despite the fact that there are ongoing wars, there's Russia-Ukraine still ongoing, there's Israel-Palestine, and then now Iran, nothing has changed. It just seems that it's another day of something happening in somebody's backyard.
Right, quite some resilience, and I don't know whether we should be concerned about that. should we be concerned that the market is not really responding as much to, the geopolitics of everything, or is this the new normal, the resilience of the oil markets?
It remains oversupplied. So something, like I said, something drastic has to happen to spike us into 100. You have the US doing 13.4 million. Saudi's oil has stable output. All other markets, there are no real disruptions in the projected supply. And, just this June, OPEC increased, slightly the volumes to the global market. So nothing has really changed in terms of security of supply. Right. The crude market is a futures market, right? So it's always about the future of security. And as long as there's the possibility that that future is secure, every blip you see is just temporal. Like the one that happened on Friday and into Monday was just, okay, what's going to happen going forward? And by the time data started coming in and the news filtering out that there may be the possibility of a ceasefire and not the strait being blocked, the market began to ease. So it's that now. The market reacts faster due to availability of data. They can call uncertainties even better now. So yes, this may be the new normal.
Okay, interesting. Thank you for that, Dosu. And I'm coming to, Bolainwa. We did see, the fallout, aside from oil prices, even here in Nigeria, pump prices went up, right? On Monday, we were seeing 925 and, upwards. What are your thoughts on how, these changes are happening here? Are prices going to come down? How is this going to trickle into inflation?
I think prices will come down. I think that the change in pump prices we saw is, just like we've been talking about, is just essentially, and that ultimately prices will come down. And to the extent there's not a very great fear of inflationary impact on the short and midterm basis.
All right. And we've seen, inflation trend downwards 2 months consecutively now. And, we've seen also the CBN hesitate. Back to back, they've had a hold on, interest rates. What are your thoughts on, are we going to see another hold because of the volatility and uncertainty? Are we going to see them finally cut rates? How is all this larger volatility, how do you see this influencing MPC's decision next month? Bolainwa.
And I'm no macroeconomic expert. Yes, can you hear me?
Yes, I can. Go ahead.
Yeah, I think they're going to hold, and I think that there is a good fundamental basis for that. What we're seeing in terms of the trajectory, the inflationary trajectory is a good thing, but it needs to be sustained a bit further, just like you said, especially against the backdrop of the uncertainty that's going on. And, we have talked about the fact that these have been blips. The situation seems to be moderating somewhat. Markets seem to have priced in a material reduction in escalations. But never say never. Remember that even within Iran, there are political dynamics that we may know some about and we may also not be aware of some about. There will always be the hawks. There will always be the people who are saying calm down. The Iranian parliament actually did vote in favor of closing the Straits of Hormuz, but it wasn't executed, as we know. But all sorts of things can happen. The reprisal attack by Iran, for those watching really closely, it almost looked like things were staged to just kind of more or less like an off-ramp exit to just kind of moderate things and de-escalate in a controlled manner. We've seen this kind of thing before. So everything points towards some stability, but again, never say never. So in the wake of all of that, this backdrop of all of that, a hold is what I would expect going forward.
All right, we'll see whether or not that pans out. And finally, to tie things together, and I think a question for you both, let's begin with Dosu. Make the most of a bad crisis, we say. What should be Nigeria's play, with all of this going on? How can we benefit from this? Dosu?
Oh. That would be a tough one. I don't know. I mean, that's now going into speculative territory. And I think maybe it's more a long-term thing where we develop infrastructure and capacity for the market to, I'll say we'll profit from these kind of volatilities that happen, strengthen our markets, strengthen our shipping infrastructure, strengthening our support, in terms of finance, being able to move these volumes out. I mean, we are majorly an exporting country for crude, and it's to build value around those these assets. The assets meaning oil and gas, long-term investments. An example is like our LNG structure. There's a way we say it in oil and gas that we're a gas country that produces crude. We've got massive, reserves of gas. And these are the things that we should be investing in. Like I said, long-term infrastructure, such that these conflicts will always come. I don't think there's any year there's no conflict. But it is this long-term investments that actually help us, invest. This will go away, or at least the market's perception of it will go away. Russia and Ukraine are at the back of our heads, literally. It's happening every day. But it's not a daily decision when we're making market moves, because it will now become part of the norm. And I think that's probably what's going to happen as more and more wars do happen and conflicts happen. They will just fade into the background while they're continuing. So my take would be have a long-term strategy for things that make you resilient to the market and also put you in a position to profit from it when these things happen.
Interesting. So building resilience here in Nigeria. And coming to you now, Bolarinwa, what's your perspective? Is there any silver lining in this for Nigeria?
Yes, indeed. I think that this situation, for instance, underscores one major thing: refining capacity. In the past, when you had low oil prices, our budget funding suffered. When you had high oil prices, the whole subsidy matter. So we were losing on both ends of that situation. But with our more recently acquired ramp up in refining capacity, we're already essentially on the way towards building the kind of resilience we need to build. Be that as it may, you have to refine feedstock. You need crude oil to feed your refineries. So the opportunity for us here is a renewed focus on expanding our crude oil production output, so that in situations like this, we have more crude oil to sell at whatever higher prices the market is saying they are. And also, we have enough feedstock so that the refineries at the scale of the Dangote refinery, for instance, will not have to go and buy crude at higher crude prices in situations like this, however limited in scope and time they are. So that resilience happens when we have enough domestic oil production, like I said, to sell, and also as feedstock to our rapidly expanding refining capacity. It's a renewed focus on that will build the resilience we need to have. It's already happening. We just need to hunker down, and drive it further.
All right. A great conversation, gentlemen. Thank you for joining me, Bolarinwa Jai, oil and gas technologist, and Dosu Odekunle, MD, Mark and Synergy. Thank you.